Good morning, traders and investors. Dale Circuit, the Trader Boys. We have the markets up once again, so we're just continuing the bullish move from last week. S&P's up 37, up 1.2%. The Nasdaq here is up 1.19%, up 123 points. Dow on the Charger 373, and the Russell up almost 2% at 2780. We got the 10-year bond market down slightly, oil down slightly, and we've got gold down 50-60 cents here. Inverse markets here coming down, so markets in a pretty good shape. Here's just a little bit of information for you, just out of interest. Here's a little bit of information out of interest. We've got the markets here from over the last week. S&P up 4%, up 121 points. Dow up 397, up 3.83%, and the Nasdaq up 5.72% for the week. That is some insane gains. What's interesting here is if we look at the breakdown of the sectors, infrastructure up 3, here 5% on utilities and 5.07% in technologies. Hey, money's usually coming out of utilities going to technology, or vice versa, coming out of technology going to utilities on a breakdown of a market. We got money coming into both of those at the same time. That's where this is a little different on the foundation, right? The fundamentals of the markets here. Industrials up 4, financials up 3. We want to see some more strength coming in here. Energy up 2, needs more strength on here to have a longer term push in the market. So if we can get more money coming into financials, the banking system, and the energy markets here, oil, we'll see a longer term push in these markets. And the Nasdaq's already opening at all-time highs again this morning. So game on to the markets here. So you can see here's the all-time high in the S&P 500. Now this is the setup we were talking about this last week. This is called a bull trap. Right here is resistance. So resistance is traditional technical analysis education. A very, very common way to trade. Everyone kind of trades this way. Now above us right here is a supply area. Supply area is unfilled institutional sell orders. So as we break above resistance, the rules are get long the market, get bullish to market, market's going up. Until we hit this area here where institutions just absolutely slam the market. Now, you can see this is halted the market here, has not slammed the market. So this is definitely an area of interest here, 3170 in the S&P. We break above that, we got some room to run up into these highs up here. This is going to be an area we need to watch. We don't take any action here until we have weakness coming to the market. So we got to wait for permission from the market. So we got to break below this candle's low here in the overnight session before we actually get short. So break the low, wait for retracement to come back into supply, and then we can look for the short. That's how we can stack the odds in our favor and get greater probability behind our transactions. This is the Russell 2000. This was the supply level we're looking at last week. It worked absolutely beautiful. Here's the open of the market last night. Up we go, up we go, up we go through the supply into the trend line, into the next area of supply just above us. So same principle as the S&P 500. We've got to get below this candle's low here to get permission to get short. We're currently in an uptrend here, and it's a strong one at that. So break below this low here, that's permission to get short. So you can take it on the breakdown below this low, or you wait for the breakdown, come into a little demand area, wait for the retracement, and boom, there's your short position. Now, market can just continue up, and if it does, maintain your long transactions. Here's your Nasdaq all-time highs. Nothing to really report on the Nasdaq. I mean, we're just off those highs right now, so it can just keep going higher. Right? We've got the VIX, measurement of fear. The VIX is in demand, so this is stacking the odds for these supply levels to work. Right? So we can take call options on the VIX, and this is a phenomenal transaction. One of my favorite trades of all time is buying call options on the VIX, and because when the market drops, this thing runs several points at a time. So we can get in on a 27 call here, run to 35, and that's a pretty good move, $7 move there for very cheap option contracts. Here's oil. Oil has hit our supply level order this morning. We're tracing back down into it. We've got a little demand area here, so this is where we've got to wait for the market to make a decision. Right, we're still in the uptrend, so yes, you could buy a 40-50 on oil, right, and trade it back to the 40-90. And now that 40-cent move there, 40-50 to 40-90, that's $400 per contract on an oil futures contract. So cheap investment, nice gain there. Now, is it going to go higher? Is it going to go lower? That is the question. That's going to have an impact on the stock market. So if oil breaks below this demand level, that gives these sellers are in control of this market. You're going to have demand here. So wait for the retracement back into a supply, and then you can look for the short if it breaks below this demand level. Nothing to do just yet. Right, here's the gold markets. Gold is looking great. This is on a daily time frame. Came up at a lower demand level in the uptrend. Break above this candle's high, and we're gonna have some strength behind this market, and it can just keep chugging. So gold is our long-term uptrend play, and it's doing great. Let's just break this down to a 1 hour time frame real quick. We're here coming into a little bit of selling pressure here. Just above us is where the supply is, though. So gold can continue to move up, hit the supply area, come back down to this demand area. Let's give you some drawings here so you can make a better sense of this. So you're going to have supply on the 1 hour time frame just above us. Right? And we then can enter off of this demand level if it's able to pull back this far, right? To then continue up. Next supply level is right in here. So gold's a great play from a day trade perspective, to a weekly trade perspective, to a long-term investment. Big buying pressure on this candle here. Right? Buyers coming in nice and strong here and here. Beautiful transaction. Right? Break above these highs, and we are game on. So you can look for the short-term trade on the short if you like to trade counter trend, lower probability, right? Higher probability, come back into the demand level. Now this may create a new demand level right here before it breaks out. And if that's the case, up into supply, back to the demand, take your entry all the way through to 1800, 1803, 1804 there if you target, if you're looking for a day trade. On the longer term, stay in the trade. That's it for Monday, July 6th. Have an awesome day. Have an awesome week. I'm busy with meetings all day with the Trader Boys, and I am pumped and excited because we are putting this content together, and it's coming. Stay in there. Stay in the trade. Have fun. Manage your risk. Have a great day.